Welcome back, my finance nerds. Now, last week in the ASX, well, just in Australian news in general, we had some interesting news on the same week about two of our beloved travel companies, that is in Qantas and Virgin. So today, what I'm going to cover is Bain Capital's acquisition of Virgin and what exactly that means for Australians and the company itself. And number two, I want to cover Qantas letting go of 6,000 jobs. That's right, 6,000 jobs, which represents about 20% of its workforce, and its raising of $1.9 billion. So what we're going to do is go into the justification of that capital raising and what the forecast is for travel in the future from Australia's biggest airline. And as always, guys, make sure you smash the like button down there for the YouTube algorithm, and also because these videos just take a long time to make. So if you could do that for me, that would be greatly appreciated. If you're new to the channel, hit the subscribe button because I'm always putting out some content about some stock stuff or some business things. And hopefully you can learn something along the way as I learn a couple new things, hopefully from you guys, and doing the research as well. Anyways, guys, let's get into it because we've got some juicy ass news on Bain Capital. So we've done it. Bain Capital has won the bid and become the favoured buyer of Virgin Australia. So that's great. The good news is that I can actually use my Virgin Velocity points pretty soon. But in all seriousness though, it's been such a bumpy and long ride for Virgin with, well, many issues along the way. But for many of us, I guess your question is as good as mine. Who the heck is Bain Capital? What do they do? And what is this going to mean for Australia's second biggest airline? Well, I did a bit of investigating, and based in Boston, they are a private equity firm, of which, if you're unaware, they basically just take money from private investors, which is the opposite of the stock market, which is public. And that money is invested into projects or acquiring companies like Virgin Australia. Now, in an interview on CNBC about 5 months ago, they basically outlined this about their investment decisions.
Private equity is not about cost cutting, it's about growth. No one wants to buy a company that is shrinking. And so we spend all of our time thinking, how do we grow companies? How do we do more R&D? How do we invest in new products? That's great capital, that's growth, and that's what you need to do in private equity. We're building a brand new cruise line, Virgin Cruise Lines with Richard Branson, investing $3 billion behind that.
Now there's two interesting takeaways from that video, right? So the first one is that they want to buy businesses where they can make massive multiples on it. So they're not looking to buy a Woolworths, a Coles, a Audi, you know, all those type of shops where you have a consistent base of customers, and well, that won't increase unless you increase the population and demand, like toilet paper, for example. But they want to buy a business that hasn't reached that full potential yet and be able to provide, you know, their expertise or some capital behind it to make sure that it gets there. Now, I'm not sure if an airline is the space to do that, especially one of the smaller ones in Australia. But in saying that, if it is a smaller airline, then it has arguably more chance for room to grow. But I'm not 100% sold on this, and I really don't know how it expects to sustain growth when there are virtually no customers for flights. Now, the man leading the charge for Bain Capital is Mike Murphy, who had an interview with Australian Finance Review on how business was going to be reborn in Virgin Australia. In the interview, he outlined that they are looking to have 6,000 to 7,000 employees with 60 to 70 planes running by September. And in terms of providing value, they've outlined two main factors. It's got to be one, budget friendly, and number two, it's got to have very good scheduling. Forget the fancy meals and clubs at the airports because those are going to be cut. What Bain Capital is looking to do is to roll things out slowly and depend on the demand of customers, which is unlike what Qantas did with its fleet and, well, got roasted for it. Factually, I might add. So in the light roast, Mike pretty much said, it's important to get the balance right. I mean, as you just saw with Qantas announcements coming out of the gate with too many planes and too much cost, just compromises the future of the whole business. And now the second important thing to note there is that they have already invested $3 billion to get Virgin Voyage off and running over in Florida. And it seems like that's still going ahead sometime later in this year. I don't know if that date there is meant to be the date with the current changes, but that's what they have there, and they have already invested the money with Richard Branson being one of the partners of Virgin Voyages. So I don't know about you, but it would not surprise me in the slightest if good old mate Richard reached out and just said, hey, my airline's doing it tough there in Australia. Why don't you just go and buy that for a couple $1 billion? Now, another thing to note, because, this is a stock channel, is that Virgin might not get relisted back onto the ASX. That's because it's most likely that Bain Capital is going to be raising funds privately, being a private equity firm. So I wouldn't be surprised if Virgin doesn't come back onto the ASX. It might come back, but really, the share prices were so low already. I don't know how much money they could actually raise. And also remember, Virgin Australia wasn't really Australian. It's owned by so many other entities abroad and now purchased by an American private equity firm. But anyways, I'm going to refer back to the roast previously mentioned by Mike as a transition into the next topic, which is Qantas. Great transition, I know. Now, Qantas have let go of 6,000 workers because there's literally no flights and more cases in Victoria, with more cases also coming internationally from Beijing and parts of the US. When it first came out with this announcement, there was a trading halt, and the following day, the shares fell by 9% to $3.81. Now, the next part of the news is that they've also put in a capital raising of $1.9 billion, of which $1.3 billion is made up of shares that are institutionally placed, with $500 million being raised through an SPP, which is a share purchase plan to eligible shareholders. So what this basically means is that it's issuing 327 million shares. That's 25% of their current share holdings. Talk about dilution. Now, the shares are fixed at $3.65, but I mean, it's a decent discount, but nothing to pour all your, life savings into, in my opinion. But yes, the capital raising is to support their 3-year recovery plan, which is good to dive into because Alan Joyce gave a bit of a forecast for the airline and travel industry. I mean, regardless if Qantas or the Australian government permits travel, there are so many factors that are at play that will determine whether travel will continue. Because I think for most people, when we talk about traveling again and things normalizing, we equate that to a vaccination or opening borders and then being able to travel again. But think about the changed consumer mentality, whether other countries will open their borders as freely, and also whether consumer sentiment or behavior will be, well, I guess the same as pre-COVID. And Alan Joyce backed this up by saying that travel won't be the same, even if a cure comes out. And I think this is a really good time to remind everybody that if you're investing into travel stocks or flight companies, whatever, just keep in mind that the fluctuation in stock price is one thing, and it's definitely one way to skin a cat within the game. But the performance and operation of the company is totally different. Remember, most of these businesses don't even have customers, or very little of them, whilst the operating costs are still high. It still costs a lot of money to hold planes. It still costs a lot of money to keep people on the payrolls. It still costs a lot of money to have rent going and all these registrations that you have to pay for. Now, if short to mid-term stock picking is your game, I'm not going to fault you there. I mean, I've traded short to mid-term, and on this channel, on the comments, I've always said, again, there's many ways to skin a cat within this game. But just understand that even if the share price does go up for a little bit, over time, the business might not even pick up at all, and people will start to sell down slowly. And so you might be staying in a stock that isn't going to improve for a long time and staying in there for the sake of, well, hoping that you make your gains back up, equalize, and then maybe you exit out there. But just remember what Warren Buffett said and what he was looking at. And now Alan Joyce, of all people, is voicing the same concern. I mean, who else do you need to listen to? You've got the Oracle of Omaha, and now you've got Alan Joyce, who's come out, the CEO of Qantas, Australia's biggest airline, who's even saying that this is going to be a very, very long road to recovery. In saying that, I'm not trying to sound pessimistic or anything. I'm just saying, consider all of these things and take it in with a bit of context in what we're seeing and, what these businesses are actually saying. So yeah, I guess I just want you guys to think about that. No international flights till mid-July 2021, more outbreaks around the world, and even more in our own backyards in different states. Congratulations, Queensland, for not having any major outbreaks. Good job. But it is definitely interesting, and when September comes around, I think we will see where the market sentiment lies and what the effects are if the JobKeeper payments are reduced or stopped entirely, which I don't think will happen because that's going to cause, yes, all kinds of messes for the businesses and the people who are still employed through the businesses and receiving money that way. But yes, guys, that's it. What are your thoughts? Yes, you watching this video and who have made it this far. Thanks, by the way. What are your thoughts on Bain's acquisition of Virgin and QANTAS raising some more money and letting workers go? It's interesting for me because there was a lot of optimism of things normalizing as, measures start to ease. But it seems like what the banks and the economists were saying when they had all their reports out is slowly coming to fruition. And I think over the next couple of months, this optimism is slowly going to die down as our expectations are not met. But I mean, the market's a crazy place. I don't know what the sentiment's going to be like. These are all just my thoughts and predictions within my head. Do your own research. If you made it to this far of the video, give me some plain emojis down there. A lot of plain emojis. Greatly appreciated, guys. Have a great week. I'll catch you guys next time. Cheers.